Okay. Okay. So start. All right.
Good evening, everyone. It is my pleasure to welcome you all on behalf of MSc Financial Services for a webinar. The topic for the day is the impact of macroeconomy on asset allocation. To discuss about that with us, we have Mr. Glenn Roger Carr, a very learned, experienced person in stock market. Before I hand over to Glenn, a brief introduction. Glenn is an MCOM PG diploma in sales from NIS. He joined Navia Markets Limited as a management trainee in 1994 and moved on to head the company's online trading and NRI business verticals. In 2004, Glenn was instrumental in setting up the group's foray into the portfolio management business, for which he was a principal officer. In 2009, Glenn moved on to join Unify Capital, the largest PMS player in South India, in a senior management role. Glenn has a total of 22 years of rich experience in the area of advisory and portfolio management services to the resident and non-resident Indian investor. Glenn is also a founder director of Finmark. Finmark Trainers is one of the leading training providers. They have more than the promoters have more than 20 years of experience in capital markets. They have been into portfolio management also. They have been key promoters involved in, both the key promoters have been involved in training since 2004. They have exposure to international training methods. Promoters have experience of having led more than 2,000 training programs. With these few words, I'll just touch upon what the topic about asset allocation, the importance of asset allocation. The conventional wisdom says asset allocation is very important. Don't put all your eggs in one basket. எல்லா முட்டையும் ஒரே கூடையில போட்டீங்கன்னு சொன்னா என்ன பிரச்சனை உங்களுக்கு ஒரு பாஸ்கெட் பிரச்சனை வந்தா all the eggs go waste. So you distribute your wealth. Asset allocation உடைய ரொம்ப பேசிக் இது வந்து you have to distribute it so that everything is not impacted by one bad decision or things like that. So that is asset allocation is one of the very important things that you have to keep in mind. How the macroeconomics impacts the asset allocation. What are the clues you can get from the macroeconomic scenario, or how it will be helpful in having a look at macroeconomics to choose the appropriate asset allocation. All these things will be handled by our expert for the day. The floor is over to you, Mr. Glenn.
Thank you, sir. Thank you so much, Sundar sir. Thank you for inviting me today. Thank you, everyone. Good to see a good crowd. Mostly I will speak in English. Tamil பேசத்தேன், so கொஞ்சம் வந்து தமிழ்ல பேசி
you can slip into Tamil.
Yeah, I will. So bilingual we will speak. நீங்க வந்து if you have any questions வந்து you can just keep it towards the end. கடைசில வந்து we can have a discussion. I will not take more than 30-35 minutes. But just before that one, I just want to thank a lot of people who said they are going to be here today, because most of you in the Madras Stock Exchange were at one point when I started as a management trainee, and I start பண்ணும்போது 1994 start பண்ணும்போது என் salary வந்து 2,200 rupees. That was my salary when I started 1994. And many people in the Madras Stock Exchange, நான் வந்து That was the last few years, flow trading the last few years. So I was lucky to go once or twice with one of my mentors, Mr. Krishna Chandra. I don't know if he's here. And a lot of you have mentored me, have been very, very kind to me, have taught me so many things. So, big thank you. Without y'all, I won't be what I'm doing today. And unfortunately, I think the it had something like the stock exchange, the flow trading. It had a huge or charisma in it was exciting times. Now we have got technology. We have seen so many clients. The market has expanded. That you don't get that joy and the 1994 level, 95 and the joy on the so thank you to all those from MSc today or financial services company. Thank you all for mentoring me and bringing me to what I was. So just to before I start, a lot of young people are there. Just to encourage you, under the stock market is a great career path. So ninga pathingla, I told you I started at a salary of 2,200 rupees, and I was a salesperson. My specialty was marketing and sales. But in 1999, 1994 la join பண்ணிட்டு 1996 la வந்து I went to Coimbatore as a branch manager to head that branch. 1999 la வந்து my boss called me back and he said work with the team with IBM, and we went on to create India's first risk management system. This team and IBM, we created India's first risk management system. IBM later sold that risk management system to Odin, to Asian CRC, then to Odin, and today I think part of that risk management system is actually what is being used by many stock exchanges. So that was a great experience. Someone from sales, learning technology, learning the stock market. And I was also heading the team which created India's third online trading. Mercantile Securities, the name of the company. Today it is called Navya Markets or Trade Plus. When I was there in 2000, end of 2000, 2001, we were the third after ICICI Direct, and I think it was Kotak that we launched online trading in India. So growth one day, it is something which happens inorganically, and it's a great career path. After that, I went on to head a portfolio management company. We were managing about 300 crores. Then went to Unify Capital, one of the largest PMS players. I think they manage about 4,000, 5,000 crores today. So it is a great learning experience. It is a lesson that stock market one day, it is, people think there is no career. Anna, it is a great career. The capital markets can provide you a great career. I don't think someone can quickly rise in any other market like this. So today's topic, one day, let me go into it fast. I don't want to take too long. We can take questions after the session. I will give some more time for that. Anna, the topic one day, it is sounding little நீங்க வந்து பார்த்திருப்பீங்க ரொம்ப காம்ப்ளெக்ஸா இருக்கு. இது வந்து நம்ம தலைக்கு மேல போகமா நீங்க வந்து you would have thought. But what we are talking about is actually very, very simple. We are talking about the importance of macroeconomics, and the macroeconomics what a learning on the how do you use it for asset allocation. And that is something which I can tell you that I have seen success. I have seen people using it and being successful. I have tried using it and it has been quite successful. I don't claim to be an expert, but it has been quite successful. So I want to share some of my learnings with you. So in the last 15 years வந்து நான் ஸ்டாக் மார்க்கெட்ல வந்து நிறைய இதை கத்துக்கினேன் நான். Some is wrong, some is right. ஆனா what we've learned one day, I just want to share it with you today. So if I can share the screen one day, I will just go ahead and start the presentation. So to start with, I want to divide my presentation into 4 small subdivisions. So உங்களுக்கு கொஞ்சம் clear-ஆ இருக்கும். Flow வந்து கொஞ்சம் clear-ஆ இருக்கும். So in the first session, I will talk about the current economy. I want to give you some idea because we have various ideas about a recessionary based economy. So very quickly about that, 5 minutes, not more than that. Then I will talk about, I'm going to talk about importance of asset allocation with live examples. The third section, I will talk about how macroeconomy can determine what asset allocation you do. And finally, I think you allow screen sharing for everyone. I think some kid is scribbling on the screen. And finally, one day, we will look at what are the products which we can do asset allocation. So sir was telling me there are a lot of marketing people, sales people also here. So it will be useful for you. It is very useful for the investor also. So I hope you find the session practical and useful. See, one thing in the current situation, the COVID recession, which we are all facing, no one can claim we are not in a recession. We are in a recession. The recession, a lot of people are comparing it with the Great Depression. Because the Great Depression happened between 1929 to 1939, but the severity of the Great Depression was 4 years, 1929 to 1933. And the time the stock markets collapsed 90%. So the Great Depression was more severe. In the recession, the stock market 50% went, it is now nearly come back 47, 48%. So we don't feel that much impact. But on the ground, the impact of a recession will always be a recession. So the Great Depression was so bad that, it is a true story that American people, American public one day woke up and saw it in the newspaper. There was a news advertisement saying, gold and the gold you have to surrender it to the Federal Reserve. Illana, you can go to jail for 10 years and also have a fine. So that was the severity of the depression in 1929. Now, very, very interestingly, the depression which came in 1929 came about 8 years after a similar kind of virus was there in the US and it was cured. For 3 years, that virus was there. It was called the Spanish flu, similar to coronavirus. Cold, cough, fever, breathlessness, death. Similar. So there is a lot of similarities between what we are seeing today and what we saw in 1929, the Great Depression. Now, are we going to see a 90% fall in the market? We've seen 50%. We've seen recovery. Can we see some more fall? Economic numbers seem to suggest that we must be prepared for some amount of correction. Definitely not 90%, but can we see from here another 25, 30% fall? I think it is possible because the economic numbers don't support the stock market movement. We will discuss a little more about that as we go ahead. One of the biggest problems during the Great Depression was unemployment. 27% unemployment was there in the US. India, today, we started at some 22, 23. Now we are saying it is 10%. But if we add the unorganized sector, I think we are somewhere close to about 15, 16% of unemployment in India today. This is the kind of crisis, and this was the economic times. In it tells you restaurant industry, 7.3 million people working, 2 million people have lost jobs. Education field, 18 million people working, 4.5 million have lost jobs. And every day I'm hearing some people who have lost jobs. Automobiles, 5 million people, 2.3 million people have lost jobs. So that brings us to a major question. And with this, I will end the first section. How long will it take for this recession to last? So, in the graph, I've taken the last 5 recessions in the last 100 years. And the recession gets over when the graph goes above 0. When the graph goes above 0. So, you see all the recessions, the graph has minimum taken between 36 months to 48 months for the graphs to go above 0. So 3 to 4 years is a period where a recession ends. If you look at the light blue line, this is the Great Depression. The Great Depression we just saw. So Great Depression it had a W-shaped recession. So when it started, it fell for 18 months, then it recovered slightly, then fell again and recovered. So it was a W-shaped recovery. So people are now telling India we could have a W-shaped, we could have a L-shaped. L-shaped economy kilo vandittu adhe or level recover and the level it will be there for a long time. Some people are telling it will be K shape. K na kilo vandittu one certain sectors will go up, certain sectors will come down. They are talking about that. But one thing which we are very, very clear, it will take 3 years. So I will give you numbers. This year, this is the consensus figure. We will fall about 10% GDP. 10% GDP. So if the GDP was 100, it is falling 10% in 90 வரைக்கும். Next year it will grow 8.5% என்றாங்க. So next year 90 ல இருந்து 98.5 ஆகும். Next year March of 2022. So அதே 2 years ஆயிடுச்சு. The recession started in March 2020. March 2022 100 rupees will become 90. It will become about 97 rupees. 96 and a half, 97 rupees. So on the 97 rupees 100 atanda, it will definitely take another 6 months at least. So we are definitely going to see for full recession to get over and for us to come back over 0, it is going to take 30 to 32 months minimum. So it is very clear. So don't, expect some people are, very optimistic saying we will recover. So on the minus 10% if you see after that +1, +2, that is not the end of recession. The recession is when 100 goes to 90 and comes back and crosses 100. That is only when the recession has ended. So that can take 30 to 36 months. That is the estimate from what we are seeing now. What is the numbers? Now, if the virus takes longer, now we are all expecting virus on the January, vaccine on the January, February on the ready item. மக்கள் வந்து எல்லாம் அதை போட்டுட்டு சரியாயிடும், பிசினஸ் எல்லாம் சரியாயிடும், we are thinking. But it can take longer. We also have to remember that winter months la வந்து the virus spreads more faster. We are already seeing in Europe. நேத்து நீங்க நியூஸ் பாத்தீங்களா, பிரான்ஸ்ல வந்து they have already put a second lockdown. So we need to keep all this in mind while we are planning our investments. That recession does take time. It does take time. Nadula, there will be some recovery. We shouldn't get too excited. We have to wait for the full recovery. Okay. Now, asset allocation and macroeconomic study on there. Today, we as human beings have that in our hand. If you look at the world, 90% of trades in America is done by algos. Algos in a computer-based trading, program-based trading. 75% global average. India, 43% of all trades is done by the computer. The human being is losing value. And one thing which the computer cannot do, the computer cannot do an asset allocation based on macroeconomics. It can do an asset allocation based on the numbers you give them. Now, I am a 25-year-old and I am 30 years. எனக்கு வந்து 20 yearsல retirement ஆகணும். எனக்கு வந்து 20 yearsல இவ்வளவு பணம் தேவை. அப்படி நீங்க போட்டிங்களா, the computer will calculate and tell you how much and where you have to invest. ஆனா it will not tell you when you have to shift from equity to gold. கோல்ட்ல இருந்து ப்ராப்பர்ட்டிக்கு எப்போ ஷிஃப்ட் பண்ணணும், ப்ராப்பர்ட்டில இருந்து டெப்ட் எப்போ ஷிஃப்ட் பண்ணணும், டெப்ட்ல இருந்து ஈக்விட்டிக்கு மறுபடி எப்போ வரணும். That the computer cannot tell you. That the algo cannot tell you. So I was looking at an algo course and conducted by a good friend, and he is a real genius. He's a gold medalist from IIM Ahmedabad. And the way he was doing it, he covers so many things of this, but he says there are few gaps which only a human being can do. And this is one of them, right? So I just want to show you this very, very interesting graph. 2010 landu paranga, which is the leading asset class returns, which has given the leading asset class returns. 2010 la pathingala, sorry, 2010 la pathingala, gold is the leading returns, 24%. 2011 la pathingala, who's giving you the leading return? Gold. 2012 ninga mid cap small cap adu mandrunga. If it is mid cap means equities. So 2012 equity is given the best return. 2013 international stocks have given best return. 2014 marpaniya equity is given better return. 2015 pathingala, credit risk, corporate bond, debt is given better return. 2016 pathingala, marpaniya, debt is given better return. GSEC, government security. 2017 marpaniya equity. 2018 gold. 2019 international funds and gold. 2020, you know, gold has already given you the best return. So when you look at this, what does it tell you? Every year, some different asset class is giving you better returns. So can I do some asset allocation or reallocation? நீங்க வந்து இப்போ பாத்தீங்களா, most people talk about active investment, passive investment. I want to add one thing, proactive investment. Active investment, passive investment இருக்கு இல்லைங்களா, அதை கொஞ்சம் மறந்துடுங்க. Think about proactive. Proactive-னா அந்த ஈவென்ட் நடக்கிறதுக்கு முன்னாடி can we find out? Can we find out? For example, நீங்க பாத்தீங்களா 2010, 2011, 2010ல பாத்தீங்களா we were in a recession again. And the 2008 America வந்து the Lehman Brothers crisis வந்தது இல்லைங்களா, that recession lasted till about 2011. So till about 2011 you were in a recession, and which fund performed best? It was gold. It was gold. Then 2012-13 lande the bull market slowly started, and you saw that for 3 years equity performed well. 2015-16 la vande the debt was started getting volatile. Debt return interest rates were volatile. So the funds, government security funds, corporate bond funds, they started performing well. 2017 la marpadiya pathingala, the stock market started gaining pace. So stock market performed well. 2018 la, towards the end of 2018-19, the slowdown started happening. You could see that we were going into a recession, and you could see that gold started again performing well. 2019 la, gold was second. International stocks, Nasdaq gave a great return, and now again 2020 in a recession time, we are seeing gold performing well. So is it possible for us to know when gold will perform well, when stocks will perform well, when debt will perform well, when real estate will perform well? Unfortunately, there is no real estate, because real estate wasn't a financial asset. And today with REITs, real estate investment trust, we are having an electronic based property real estate market also, where we can invest in. Look at this. can we find out which asset allocation will give us best return in the coming years? That is the idea behind studying the macroeconomy and seeing which will give us the best asset allocation. So if you found that, even if you didn't pick the best performing, if you pick the second best performing asset class every year, you would have had a compounded return of 25% plus every year. 25% plus every year, compounded return. Forget the best, forget the top. The second, number two, one the asset, if we were able to find out, asset classes, if we were able to find out, we would have had more than 25% CAGR return. So can we do that? Is it practical? Is it possible? That is something which I want to look at in the next few slides. So if you look at it, this is the kind of return which the market has given for the last about 15, 16 years. Equity with dividend is giving you about 16%. Now it has come down a little. It has come down to less than 15, 14.9 or something like that. Gold is giving you about 11.6%. Debt is giving you 7.1%. Cash you're talking about liquid returns, 6.8%. And if you add real estate is giving you about 10.7, 10.8%. So usual number, most Indians, we think real estate gives us the best CAGR. Unfortunately, no. It is now only the third. Even gold is giving you better returns than real estate. If you look at the last 10-year returns, 2010 la start pathingla gold, 2011 la gold, 2012 la when the economy does well, gold performance starts coming down. 2013, 14, 15 la pathingla gold is coming down, stock market is going up. So gold does well in a recession. So can you and I find out when the recession is going to start? At the start, can we buy the gold? Can we buy the gold and invest? Right? We do some training programs, and you can check with people with NSE also. I think a lot of them have given one good feedback if they give for my sessions will be about this, maybe not anything else. But one thing which we've always done when we've done training programs in NSE, we try to predict which asset class will do best. So if you look for the last 2 years, we have seen every conclusion we've come to is that gold will do well. So 2018 the lead indicator, right? Macroeconomics talks about lead indicator. I'll just come to that. You found that gold mines, the gold mining, it was running at 100% capacity because they are the first indicator to tell you that gold mining more and more is happening because they expect gold prices to go up. That was the first indication. And the timeline, if we bought gold, we've got nearly 80% odd return. 80% odd return. And we tested it in one class. We said all of us will go and buy a little bit of gold or gold ETF, which was just launched then. We will just buy. And today that is given about 80% return if you didn't sell it. But most of us got happy when it was 40, 50%. We sold it. That we have to accept. But can we find that out earlier? That is the main thing which I want to come to. And the pathing last, silver will always piggyback on gold. Silver will piggyback on gold. What does that mean? Gold erna, silver erna. Ana, it won't go up together. It goes up with a lag. Silver pathingla, when gold has gone up, silver has also gone up, but not as much as gold. But after gold goes up, you will find silver moving. You will find silver moving a little more than gold and actually catching up or doing better. So, 2012 la pathingla, 2011 la pathingla, gold is given 31%, silver is given only 8%. But you look at 2012, gold is given 12, silver also is given 12. So does that mean today, as gold is coming towards the end of a recession, maybe one more year is there for gold to do well, but next year can silver outperform gold or give better return than gold? Seems to be indicating that. So can I find out lead indicators? That is the main thing when you are doing an asset allocation. Now, how do I use third section, how do I use macroeconomic indicators to find out which asset class will do well? See, when you're learning, and Sundar sir will tell you, when you're doing research analysis, one basic thing which we learn is a top-down approach. Modula we study the economy. Economy apart, industry apart. Industry apart, companies apart. For example, today, economy is doing badly. GDP is doing badly. There's a virus which is affecting everyone. IIP numbers, industrial production numbers, everything is low. And the economy, there will be certain industries which will do well. Which industry will do well? The hospital industry will do well. Not now, maybe in the future. Pharma companies will do well. FMCG, IT will do well because they are not really affected by an economic slowdown. Alcohol companies will do well. Alcohol companies will do well. So can I then pick those industries? And within those industries, can I go and pick certain companies? If I just did that, I would have done, even in this market, I would have got very good returns. So you've seen pharma companies. You can see an Apollo Hospital, how well it is done. You can see United Spirits, very good returns. Only the stock, I'm not talking about, the bottle. The stock has done very well. It is given very high returns. When I say high, I mean the returns. So, right? If we do this simple study, EIC, economy, industry, company, we are in a position to choose much better stocks. Much better stocks. You just go and look at the pharma stock. You just pick a company, even like AstraZeneca. They look like they will be the first one to give us a real true vaccine. Others might give you, China will give you 101 vaccines. I'll give you a story. A friend of mine works in Dubai. He went and took the Chinese vaccine. He took the Chinese vaccine. After taking all the doses, he came back and he said, first he said, no effect at all. And the vaccine at the he said. 1 month later, he says that he's having COVID symptoms. Okay, he tested, but it showed negative. But he has symptoms, so we don't know whether that will work. But AstraZeneca looks like the stock, like the company which will, and Oxford Serum Institute, they look like the first company to give it. Now, AstraZeneca as a stock is so boring. But when some good news comes, it will jump 20-30% in 1 day or 2 days. And is that a solid stock? So if I can do this EIC, economy, industry, company, then I am buying some good stocks. Can I find that out in advance? I'm talking about finding out based on current news. Can I find that out in advance? That is called lead indicators. So economy, there are certain lead indicators. Sir, how will I know when the economy is recovering? I will watch for few things. Sale of trucks, commercial vehicles. That is one sign. So I'm always looking at Ashok Leyland, Tata Motors. Are they showing improvement in sales of commercial vehicles? Because commercial vehicle sales improve, it means that the economy is showing signs of recovery. It is showing signs of recovery. Why? Because when companies know that the economy is going to recover, they start producing more. When they start producing more, they need to transport, they invest in commercial vehicles. So commercial vehicle sale is a very good lead indicator. Credit offtake. Are more industries borrowing? Makkal borrow panni invest பண்றாங்களா, especially industries. அது we have to look very clearly. இன்னைக்கு பாத்தீங்களா, no industry is borrowing. Borrow பண்றவங்க are definitely the person who's going to default and go off. But good companies are not borrowing. எதுக்கு borrow பண்ணலனா, there is no need to borrow. But நாளைக்கு if they see demand picking up, they will set up new capacity. And the capacity or factory create பண்றதுக்கு or machinery வாங்குறதுக்கு borrow பண்ணுவாங்க. So credit offtake, is it showing signs of recovery? That is another very good lead indicator. Capacity expansion. அவங்க capacity expand பண்றாங்களா? Additional factories create பண்றாங்களா? Additional showrooms create பண்றாங்களா? Are they hiring more people? All that is a lead indicator. So once we see that improving, we will know slowly that the economy is also recovering. But it should be a little more consistent. ஒரே ஒரு quarter, 1 month good sales doesn't mean that is the lead indicator. You have to see it for 1 or 2 months and then you can start buying. Lag indicator GDP unemployment is bad, IIP number is bad. அதெல்லாம் ஆன பிறகு தான் we note only after the event happened. So that doesn't help us too much. By then the stock market has fallen or it is adjusted that particular news. But can we find lead indicators? Sale of trucks, credit offtake, capacity expansion. இதெல்லாம் தெரியுதா? Can we find the lead indicators? That is very, very important. You can. I'll just skip this slide. Now, if you look at this, can we erase this? Some person has scribbled, I think. Can we erase this?
Yeah. Okay. I'll stop screen sharing.
Okay.
I'll give it again so that it will go off.
Yeah, sure.
I'll just stop sharing stuff. Yeah.
Yeah, fine. So if you look at this particular, someone sent me this PPT. நீங்க பாத்தீங்களா, look at valuations. It tells us Nifty is trading at 32.69 times. 32.69 times. That is a very, very high valuation. That is the current valuation or trailing P. Based on last year's earnings, we are at 32.69 times. Now, next year, one day, if earnings are improving 20% or 25%, then also we will be trading 22, 23 times. So we are not trading very cheaply. Ana, neenga pathingla, the macro indicators, IIP numbers, minus 10, GDP growth, minus 23. This is last quarter. In the US dollar INR, 73.6. Brent crude, 42.37. This is one good thing for us. This is one good thing for us. And all these macro indicators, all these macro indicators tell us that things are bad after they get bad. After we go and get a COVID test, then if someone is telling us you have COVID, no use. You already know you have COVID. But if someone can tell you with the early symptoms, the first time you sneeze or the first time you are having a headache, if someone tells you that you are having COVID, you can get treatment earlier. So that early symptoms is here. They call it the C cycle. Capacity utilization. In good times, capacity utilization in 2007, peak was 90%. Today, capacity utilization is 69%. The moment capacity expansion goes above 75, 80%, you know that recession is ending and economy is reversing. That is one thing you can follow. Look at credit growth. Credit growth, how much loans are the banks giving? And the credit growth in December 2007, 23% growth in 2007. Current it is only 5.3%. No one is borrowing. So no one is borrowing in a capacity utilization growth, investing in the company is very low. But in the 5.3%, 11%, 12% portion, it is going above the January low. January low, when you looked at credit offtake, recession was very clear it is coming. It was very, very clear recession was coming. But the stock market somehow went up. How it went up? Because of liquidity. More money was coming because more and more countries are pumping money into the system. In particular, America, they are giving you something called helicopter money. I don't know if you heard that word, helicopter money. What is helicopter money? They imagine one helicopter is going above a house and they're throwing money. Because sometimes people are waking up in the morning and they're finding money in their account. One of my brother-in-law lives in New Zealand. He said he woke up one morning and the full family found $2,000 in their account. For adults, $2,000. For a child, $500. For the child to enjoy. That is called helicopter money. Now, many of the countries are giving helicopter money, not only to individuals, but to corporates, to banks. So those companies and banks, they are not investing in their own country. They are coming and investing in other countries to de-risk themselves. Now, most of them are not going to China. Because of China, everyone hates China now. So India is getting a lot of the money. Internally itself, we have no place to invest. FT Laporta, actual rate of return is negative. So we are putting in equity. So we are an equity, liquidity-driven rally. But if you really want to see that the recession is over, please look at capacity utilization. Please look at credit growth. Two very important things. Right? Credit growth order, this is the graph. If you look at credit to industry, it is only 2.5%. That is a very dangerous sign. Very dangerous sign. So every sector, credit growth has come down. Except for agriculture, where it is come down only slightly. Matra industry, credit growth has come down terribly. Every sector. So no one is borrowing. Just wanted to share one very interesting lead indicator. It was a surprise to me when someone taught me this. You know what? If you want to know when Asian Paints will go up, please go and check the monsoon forecast. If you have a good monsoon, the first company which will do well is Asian Paints. You know why? Because the survey tells us, nalla monsoon irunda, farmer vandu nalla crops irukum. Right? Good monsoon means not floods. Good monsoon. They will have good harvest. Good harvest irunda, and the harvest la vara panatha vandu vechi, what does the farmer do? You know what he does? He paints his house first. He paints his house first. That is his first priority. Therefore, you can just look at Asian Paints. Asian Paints has been trading flat from early this year. It fell during the COVID lockdown like every other stock. And then you look when the monsoon really started picking up in August. When the southwest monsoon really started picking up in August, look at the share price rise. Look at the share price rise. Huge rise. in the share price. You have a good northeast monsoon now, which is coming up, then the price will even go up further. So lead indicator, if it's a good monsoon, go buy Asian Paints. By July, I knew it was a good monsoon, but I didn't buy. I didn't have so much money at that point to buy, but I was tracking Asian Paints. And just like I said, it went up. It went up. So these are some lead indicators. So macroeconomy, asset allocation, investing in stock, not something great. It is something very, very simple. If we keep eyes and ears open, number one day we can pick up some tips and solving. We can pick up some good macro tips, and then you can make correct investments. Now, when I do a macro investment, macro analysis panite, I'm coming to a conclusion that there's a recession. If there's a recession, I will invest in gold. If the recession is ending and you're going to see a nice big jump in economy, then I will go into equity. Just when the recession is ending and you are finding that the economy is slowly picking up, that would be the best time to invest in real estate. So Ninga, if you go back and see 2010, 2011, those were the best times for real estate, because by 2008-9, when the recession was quite severe, interest rates had come down, property prices had come down. And when property prices and interest rate come down, you and me are now more interested. Ninga on newspaper la paakreenga illingla? I don't know if you're seeing Casa Grande, Sholingnallur, 3,799. Ade property one day, ninga 1.5 years back poi paathingala, it was 4,999. 4,999. Today it is 3,799. And today you can go and get a home loan at 6.75, 6.9%. 2 years back it was 9%. So you're getting interest rate down, you're getting home prices down. At some point of time, when people are saying, Sari, let us now buy, because I know my job is secure. In the recession, and job pogadu, and salary cut agadu. When will they know that? When things are picking up. So at that time, they will go and buy into real estate. So my current analysis is, I think when this recession is ending, the next sector which will do well and give us bumper returns will be real estate. So by next year, can I start buying a little into real estate? Yes, I can. How can I do it? There are various products. I can buy a REIT. I can go and buy residential good stock like a Godrej Property or Shobha. Avoid the real estate companies with high debt, right? But those are lead indicators. So when I have those lead indicators, I can invest in shares. Today, I can invest in debt. I can invest in real estate through a REIT. I don't have to go and buy physical real estate, apartment vanga thevalla, land vanga thevalla. I can buy a REIT. I can buy electronic gold. I can buy international investments. I can invest in America. If I feel Chinese market will go up, today I can go and buy a Hang Seng ETF. Hang Seng ETF, invest into Hong Kong stocks. Most of the Chinese stocks also on Hong Kong. If I think NASDAQ will go up after a few years, NASDAQ ETF. So as an investor, earlier we had only stocks. In the stock wangana, recession la in the stock wangana, bull market la in the stock wangana, we used to decide. But today you have asset classes. You can invest electronically in shares. You can invest electronically in gold. You can invest electronically through a REIT in real estate. You can invest in bond ETFs, that is debt ETFs. You can invest in government schemes. So many good government schemes in this kind of market. You can invest in international investments. You can invest in hedge funds for high net worth individuals, private equity funds, hedge funds. So we have so many asset classes, so many opportunities in front of us. I'll just quickly look at few and then we will close. Gold ETF. I think all of us know. The most popular gold ETF is Gold Bees, right? Today, if you have 45 rupees, you can buy one Gold Bees, 0.001 gram. And gold will do well, maybe even continue to do well for another 6 to 8 months. You have so many uncertainties, American election. You have American-China tension. You have the vaccine tension, whether it will come out on time. Idella can definitely push gold prices up. So even gold prices has gone up, it might have a little more left. So best way to invest, if we do an a macroeconomic analysis and say gold has some more space to go, best place to invest is gold ETF, because you can buy and sell quickly. You don't need big money. One unit, 45 rupees, 0.001 gram. That is why more and more people are investing in gold ETF. Today, till July, 16,000 crores have been invested in a gold ETF. The number of investments into physical gold during that time has come down drastically. For the first time, electronic gold investments is more than physical gold. That is why all gold jewelry shop galia. So gold ETF, great place to do an asset allocation. Sovereign gold bonds, all of us know. I don't want to go into it further. But here it's a 5-year lock-in. Now 5 years kalichi, will gold still be high? Very unlikely. Because gold is an asset class which will do well in recession. Recession munja perige gold will come down. It won't fall severely. Ana konja keela vandittu sideways, it will trade for a long time. So SGB now, I don't recommend. Real estate. If you look at the real estate, the economy was recovering in 2012-13, and you see the real estate has performed so well during that time. When the economy started falling off and the economy stabilized, real estate prices peaked and then started coming down. Today, if you look at it, real estate prices are negative. But if the economy starts picking up, this trend will change. So all asset classes are a cycle. Life is a cycle. You will have good times, you will have bad times. Asset classes also will have good times, bad times. So real estate had a great time between 2011 to 2004, maybe about 2014 initially. Next 6 years, real estate has had quite a harrowing time. Now 2021-22, will real estate prices go up? That is the question we ask. The lead indicators suggest that there is a probability. Why? Because interest rates are falling, housing prices are falling. At some point of time, all of us will say, this is a good point to buy. Today, we are not buying because we don't know whether we will get our next month's salary, whether a job will be there. And on 1 year time or 8 months time, yes, my salary is stable, my job is stable. Then we will go and invest. And then you will find the real estate sector doing well. So can I make use of that? Can I make use of that? I may not have money to buy a house or a property, but can I buy a REIT? REIT today is mostly in commercial, but still that also will go up. Can I buy a commercial? Can I buy a Godrej property? Can I buy a Shobha? That is a way for us to do a macroeconomic analysis, find out the lead indicators, and then confirm it and buy or invest into REIT or into real estate stocks. Same trend which I showed you. I think 2010, when the economy fell, real estate also fell. When the economy started recovering in 2011 end, in 2012-13 the best time. The best time 2012-13 for real estate. And then it was there, came slightly down and it was there for a few years before it came down drastically, and now it is down. Now whether this will go back to this high, it is very possible, very possible. So like I told you earlier, REIT is a great place to invest. The latest Mindspace REIT you would have got a interest rate from, not the interest rate, the rental payout is about 7.7%. Please remember, Mindspace REIT is a tax-free. All the rental payouts in form of dividend is tax-free. That structure is kind of complex. You have to see REIT by REIT whether they are tax-free. But Mindspace, it is tax-free. So you are getting tax-free 7.7% in your hand per annum. Plus, if Mindtree, the value of those lands or the value of the IT parks appreciate, the REIT will also appreciate. If you invested in Embassy REIT between 2019 March and today, your return is 20.7%. 20.7%. And that is only the capital gains. Apart from that, you've got 8%, 2 years rental yield. So that is the kind of opportunity and potential there in a REIT. And REIT invest the one unit is 60,000 rupees now. Earlier it was 1,20,000, it's only 60,000. So if real estate you think will do well, REIT is also a good place to invest. If you think foreign stocks will go up, you can invest in foreign ETFs, NASDAQ 100 ETF. If I invest in a NASDAQ 100 ETF, I'm owning Apple. Today, Apple as a company is larger than Brazil, larger than Russia. It is 70% of Indian GDP. I will own those shares. I will own Netflix. I will own Amazon. I will own Facebook. I will own IBM. I will own Microsoft. So my opportunity to hold international stocks, again, available through ETF. So if I think Indian economy won't do well, but international economy like a Chinese stock market might do well, Hang Seng ETF. So today we have so much options. If we do our homework properly, if we do our asset allocation properly, even debt, if we think that debt will do well, then you have a Bharat Bond ETF, excellent ETF, some very good quality PSU names. We can invest in that. So today we have various options, sir. All we need to do is do a proper macro analysis, simple analysis, find out look at a few lead indicators. What are the lead indicators telling us? Which asset class, which sector will do well? Other part, if we then make an asset allocation, and this asset allocation is called tactical asset allocation. Tactical enough, every year or every 1.5 years or 2 years, we tactically keep shifting from stocks to gold, from gold to real estate, based on a macroeconomic study. So that is tactical asset allocation. So if we today do a macroeconomic study with tactical asset allocation, I think we will get much better returns than what we would normally do being a passive investor or being an active investor in the same asset class. Buying shares, selling shares, if it falls, buy, if it goes up, try to sell. Sometimes when it falls and stays there for a long time, then we get stuck. So active asset allocation is a reward in the long run, right? And even if you want today, one can invest in, safe saving schemes. If you invest in a senior citizen saving scheme today, 7.4%. Sukanya Samarthi for a girl child, 7.6%. And these interest rates are variable in the sense that tomorrow or next year or year after, if the interest rate, because they have a lock-in. So next year or year after, if interest rate goes up, this interest rate also will go up. So for many people, I tell them, instead of putting in an FD, put it in a senior citizen saving scheme. FD la putting la, you and me are getting 5%. After TDS, we are getting 4.5% or 4.6%. But if I put it in a senior citizen's name and my father's name, senior citizen savings scheme, I'm getting 7.4%. It's tax free because he doesn't fall in the tax bracket. And Nalik Wande, if interest rate goes up to 8%, this will also go up. May not be to 8, but to 7.8. So I am well protected on all sides in these kind of schemes. So today, actually, the boring schemes are the schemes which should you be interested in. So again, a question of how many opportunities I have to invest and earn money. Why should I only stick to one asset class? So please study the macroeconomy, study the lead indicators, what results you're getting, use that in practice, keep shifting your asset class, shifting in not every week, every 2 weeks. This is Sata trade. This we have to do an analysis every 6 months, maybe 1 year, and keep changing once every 2 years, 3 years, if we can do the right changes. I think we will be safer investors, we will be better investors, and we will be confident investors, and our CAGR returns will be better than what it is. I'm not saying you will be successful all the time. You can make some mistakes, but if you are on the right path, you will eventually reach your destination of getting better returns by taking lesser risk, actually. So thank you very much. This is my contact number. If anyone has any queries, you can WhatsApp me also, you can email me. I'll open the room for discussion. I don't know if I've taken too much time. I think 45 minutes correctly. Yeah, so if you have any questions, you can unmute and ask, or you can put us on chat.
Thank you, Glenn. It was a wonderful presentation.
Thanks,
nice.
Thank you so much.
So much of insight into the way various asset classes have performed, the lead indicators that you are talking about, very useful. And floor is open for questions. Anyone wants to raise a question, please raise your hand or put it in chat. It is also
Tamil you can ask me in Tamil, no problem.
Tamil kekkalam. YouTube, who are watching through YouTube, they can also give it their through the chat. They can ask their questions. Let me start the first question, Glenn. Do we really learn from history?
Absolutely. I'm a big fan of learning from history, sir. Because what happens in life will happen again, right? If we don't learn by that mistakes and we commit the mistakes again, right? We will we are. Someone said in English there's a saying. They say this that when you repeat the same mistakes over and over again, expecting different results, you are the biggest idiot. The biggest idiot will repeat the same mistakes over and over again, but expect different results. So அதே மிஸ்டேக் பண்ணிட்டே இருப்பான் ஆனா ரிசல்ட் வந்து டிஃபரெண்டா இருக்கான்னு வந்து நினைப்போம் நம்ம அது வந்து இட் இஸ் ரியல் ஸ்டூபிடிட்டி ஸோ ஹிஸ்டரி டீச்சர்ஸ் அஸ் அ லாட் ரைட் ஹிஸ்டரி வந்து மே நாட் எக்ஸாக்ட்லி ரிப்பீட் இப்போ கிரேட் டிப்ரெஷன்ல வந்து ஸ்டாக் மார்க்கெட் 90% விழுது இப்போ இந்த டைம்ல ஸ்டாக் மார்க்கெட் 90% விழுன்னு சொல்ல முடியாது பட் தேர் வில் பி சம் கோரிலேஷன் தேர் வில் பி சம் லேர்னிங்ஸ் கிரேட் டிப்ரெஷன் ஆன பிறகு யூ சா அ பிக் எக்கனாமிக் பூம் great American economic boom happened after the Great Depression. So India is this 3-4 years recession a good thing? Probably it is, because in the 3-4 years time only the best will survive. The government also will get tough. They are now struggling with fiscal issues. Government will also get a little more tough with financial spending. Economy might benefit in the long run very, very well. So history I believe that we can learn from history. Past, if we can go and study the past, at least 40-50% it is still applicable in the present and the future also.
Thank you, Glenn. Anybody else? Those who are connected.
I've got some messages saying good presentation. No one asking questions. I'll just give you a few examples, Ilingla. I'll just give you a few examples. I had a friend who was a fund manager. I will not name him or the mutual fund he works for, but he told me a very, very interesting anecdote and story. He's been in the industry for a long time, so he used to travel. So in the 90s, when you invest into a company, the company invest and that is such an important thing. I remember one particular incident where some of my colleagues traveled to one pharma company, and that company was doing very, very well. Again, I don't want to mention the name. And the company they nearly fainted. And the company it was in a village. There were in the company's parking lot, there were cows. They were rearing cows, and it was a one room. It was a kind of thatch shed, and that pharma company was trading at 60 rupees. Went from 10 rupees to 60 rupees in 6 months. Today it is not even there. So most of them they will visit the company. So the company when they used to go travel and visit the company, on the flight what are the taxi which will come to pick them up in our ambassador, black and yellow, that used to pick them up. Then he said, suddenly in early 2000, I started realizing in the black ambassador Pudu car started coming. New car started coming. What was that car? Anyone? Any guesses? Which was the car which replaced ambassador as a taxi? Any guesses, anyone? Tata Indica. Tata Indica. That was the main taxi. Most of the rough taxis are Tata Indica. So he came back and he told his research team, please see how much ambassadors are running on the road. Even if 50% of these ambassadors are replaced by Tata Indica, how much sales will Tata Motors have? He made a decision and invested. I think he invested when the stock was 70 rupees. It went to 350 rupees in 1.5 years. So some investments we can just see in eyes. What we see, we then analyze and then we buy. So we don't have to sometimes break our head too much. Balance sheet up, P&L in the ratio. I'm not saying all that is bad, that is good. But sometimes what we see, we buy. What we see, we buy. I'll give you another example, quick example. Sometime back, some few students came from Singapore to do an internship. So what I did was the first day, I booked them a cab and sent them. I said, go around the city, see, then come and tell me whether anything interests you. Some people came, they were not that great. One guy came back and he said, sir, I don't know the name of the company, but wherever I go, I see people in orange t-shirt and black pant waiting everywhere. Whatever that company is, they are doing good business. He didn't know that was Swiggy. He didn't know they were food delivery, but he gave that example. And I thought that was a great example, because I think if Swiggy is listed, it will do very, very well, because you can see the demand. Enga ponala, orange shirt, black pant. Lockdown period, who is saving us? Orange shirt, black pant. So we have sometimes just look at things, analyze them. What we see is what it is. And as a analyze pani invest pana, it is good. Sometimes lead indicators come from what we see. The sector is going to improve. It will. Okay. How do you see the auto sector with respect to electrical vehicles market playing out? See, I think it's a huge market, Rishikesh. The only problem is we don't have the infrastructure, right? If you travel to foreign countries, and I don't travel too extensively, but I do travel. We do some training assignments. I find that most of these countries which encourage electronic vehicles, நீங்க பாத்தீங்களா, all public spaces will have special parking for electrical vehicles, no fees, no parking charges. And if you go to certain countries, parking charges are huge. 1 hour you will have to pay 3,000 rupees. But electrical vehicle irunda parking charge free, so they're encouraging them. And that electrical vehicle, there is a place where you can charge your vehicle. They have the charging is it. So India, we have a lot of, we have to create the infrastructure. Because for example, you and me are living in a flat here. I have an electrical car. Where will I charge it? Where will I charge it? So we need to create the ground infrastructure before I think are good car companies ready? I think they're mostly ready. But the public infrastructure to promote electrical vehicles is much, much needed. But yes, companies with capacity and who are ready for more electrical vehicles will do better than the other companies. So that is definitely a lead indicator. Salem, Arun Kumar sir, he says, I am fresh to share market business, sir. It is very interesting to learn. Definitely very interesting, sir. Don't fall into the same trap of trying to make quick money. ஓகேங்களா? யூஸ்வலி நான் பார்த்ததுல வந்து ஸ்டார்டிங்ல வந்து நீங்க ஒரு 2-3 டிரான்சாக்ஷன்ல பணத்தை வந்து நீங்க பண்ணுவீங்க. அந்த 2 டிரான்சாக்ஷன்ல பணத்தை பண்ணிட்டு we get greedy. We put more and more money. And then ஒரே ஒரு டிரான்சாக்ஷன்ல 10 டிரான்சாக்ஷன்ல பணத்தை we lose it. And I've seen so many people like that. ஓகேங்களா? So please be very, very careful. நீங்க வந்து when you get into the stock market, get into stocks which are good stocks with a plan to invest and stay for some time. நீங்க வந்து stock market, like I told you இல்லைங்களா, you just don't have to invest only in stock market. நீங்க வந்து goldல பண்ணலாம், real estateல பண்ணலாம், debt instrumentsல பண்ணலாம். Whatever is going to do well in the future, look at that, analyze and invest. That will give you best returns. What is the best investment in the market for the next 6 months? Sir, if I really knew it, I'll be Warren Buffett. I would have been richer than that. But my guess is looking at the top-down approach, looking at the economic cycles. I think one should start following real estate good stocks very closely. One can look at starting to slowly invest into REITs. Don't invest right away because REITs depend on rental income. There are still people vacating, working from home. So once that settles down, it might be a good option for you to buy. I've been watching Godrej Properties. I like that stock very much. Very clean company into real estate, starting to slowly look good. But however, it will be confirmed, I think, in another 6 to 8 months. So that could be one good area to invest in. The lead indicators are slowly giving some direction that real estate will do well.
Sir, good afternoon.
Yes.
First of all, thank you very much for your detailed analysis and report.
Sure,
See, I just want to know how is tourism industry like Make My Trip are going to play? Because I find, see, if people give discounts, the industry will pick up. Otherwise, the pandemic continuing to be for another 6 months, people say.
Very difficult, sir. Very difficult. You look at even movie theaters. I was reading the news that the largest movie cinema theater show network in the US is filing for bankruptcy. They don't have money. They are saying some investor come and save us or we have to file for bankruptcy. So
continuing on the same question, since people are not traveling, will all the connected industry with respect to tourism, namely the hotel and other consumables and other purchases when people go, suppose anyone goes from here to Singapore or USA, they buy some consumer durables. So will there not be an impact even in the overall consumer industry at all? I mean, also?
Consumer industry in India or there's other countries, sir?
See, if you go to places like Dubai, most of the consumer goods are people who are not in Dubai. They are all people who come as a tourist and buy.
Correct.
So that will also have a great impact. So which will result in the manufacturing of such durables, right?
Absolutely. No doubt about that. So I think Indian e-commerce companies, especially into travel, into leisure, is a very, very tough time. Right? I read an article that Nirmala Sitharaman now has come out with actually quite an interesting SOP saying that LTC, you don't have to travel, you can take that money and 3 times that amount of money if you invest in any product which has GST, then that you don't have to pay tax also on that amount. But that has hurt the real estate. I mean, hurt the tourism industry further. If people are not going on holidays, then it is hurting the tourism industry more. So I think in the next 1 year or before the recession ends, there will be many companies which close down, many companies which will find bankruptcy. It will affect the banking sector very, very much. Sir, and the moratorium is finished only on September 20th. By November, you will start knowing how much of this moratorium amount is actually cannot be paid. 41% of all our loans are in moratorium, sir. 41%. So on the 41%, எத்தனை பேர் வந்து can pay after October? எத்தனை பேர் வந்து கையை தூக்கிட்டு என்னால பே பண்ண முடியாதுன்னு சொல்லுவாங்க, and we don't know. We will know that only in November, December. So these are very, very crucial months. November, December is the US elections. Whether Donald Trump will lose the election and then say, no, I cannot give control. He's capable. Anything he will do. He can say he's already won. He says, I cannot guarantee you that I will transfer power to Biden. So November, December to me is the most crucial months. If you see, if something goes wrong, you will have a big fall in the market November, December. So we need to look at these lead indicators which are coming, which are ahead of us. Analyze. If everything goes smoothly, the market has already factored that in. If everything doesn't go smoothly, then you can see a fall. So we need to look at all this before investing. So everything is not clear, sir. Everything is not clear. Certain industries will pick up and do okay. Certain industries will collapse. And banks will suffer because of that.
Thank you.
Hari, good question. Hari is asking, nowadays we are working from home. So the requirement of office space is not required in future. Do you suggest REIT is a good investment? That is why I told you, Hari, wait for about 6 months. In about 6 months, you will know how much commitment has been reduced by IT companies. But if you go and look at a Mindspace REIT, and I was reading that, occupancy has fallen 98%, and it has come to 91%. And the company, if you read the company's thing, it says that 91% of the companies which are there have a long-term lease, and there is no exit clause easily for them. There's a penalty and things like that. So yes, you can continue to see some more people working from home. Rental income might come down a little. So wait pani paranga. It will come to an end at some point. Equilibrium will return at some point. Maybe 6 months down the line, it might be a great place to invest. Don't jump now. I'm saying keep a watch on real estate. I have a feeling that will be the next sector, because history shows us that whenever a recession is over, when the recession is getting over, interest rate will be very, very low. Real estate prices will be very low. And that is when everyone will see value and start going to buy. When they start buying, it will just zoom up. That is the characteristic of real estate. Kalivel, you are asking me, elaborate on lead indicators. Lead indicators will give signs that you have COVID. For example, if you start having headache, that may start telling you that you are probably going to have COVID. Now, you know for sure you have COVID when you have high temperature, when you can't breathe, when you're starting to cough every 5 minutes, then you know it's COVID. Now, GDP, IIP, unemployment numbers, they are all telling you you have COVID after you have all the signs of COVID. So that is good to know, but it doesn't help you. But lead indicators, the headache, the feeling of tiredness, 1 or 2 weeks before you show the real symptoms, they are the lead indicators. If you find out then that this could be COVID and you go and test, you can start your treatment early. That is the lead indicator. Adhe mari in the economy, lead indicators, like I told you, capacity expansion, more people borrowing from banks, credit offtake, more demand for commercial vehicles, lorries, trucks, more demand for that. All those, more freight movement, more ships moving, taking goods, traveling with goods. All those are lead indicators. If that starts showing improvement, then we know that the economy's worst is over and we are seeing better times ahead. Reliance seeing monopoly in all sectors. That a worrying sign for economy. Yes and no. Yes, because you invest in Reliance, you'll make good money. But it is a worry, because if you look at power coming into few hands is always dangerous. You have seen who are the greatest in market cap, who are the 2 biggest beneficiaries, Ambani and Adani. right? At least Ambani has something concrete. I'm not saying Adani doesn't have something concrete, but you look at it, he bid for some airports. Now, after bidding for that airports, he's subleasing it to a foreign company. So, does he really have the vision? We don't know. But let's accept the fact. This is not a problem only in India. All over the world, it's a problem. Look at a Google. They are a virtual monopoly. Earlier, we had Firefox, Mozilla Firefox. Today, even Yahoo, no one is using. What search engine do you use? All of us are using Google. Look at the Facebook. Facebook is buying up all the other social media apps. They are a monopoly. In e-commerce, who's a monopoly? Amazon is virtual monopoly. Take my word from now, Walmart will totally buy Flipkart and Walmart will merge with Amazon at some time. And then you'll probably have Reliance, e-commerce and Amazon, only 2 stores. So the world is moving towards a monopoly. So don't worry too much about India. We are also going that way. In the next 6 months, is it better to invest in equity or commodity? Definitely, I will not invest in equity, man. See, equity can go up because of liquidity, Jayashree, but I will not invest in equity simply because equity is not reflecting the ground reality of the economy. Generally, what is the stock market? Stock market represents companies. Companies represent industry. Industry represents economy. So if you look at it from top, economy nalla irundha, industry is nalla irukum. Industry is nalla irundha, companies nalla irukum. Companies nalla irundha, stock market nalla irukum. But economy is not good. Most industries are not good. Companies performing in one quarter nalla irukku, next quarter down irukku, it is volatile. So how can the market do well? So eventually it has to correct. They call it a black swan. Black swan there will be one severe event which happens and it will fall. We saw lockdown was one such event when it fell 50% in few weeks, 1 month it fell. Can we see another black swan event? I feel there's a high possibility in November and December. Again, go back, sir. Go back to history. Ninga map parunga. 2008 la stock market collapsed. 2009 V-shaped recovery. V-shaped recovery. 2010 it fell. 2010 fell a little and then recovered again. Came back near to the same number. And then 2011 it fell. It had a good fall again in 2011. And 2012 only the bull market started again. So people thought that the 2008 recession was over in 2009. Illa. It went up in 2009. Starting of 2010 again it went up and then fell and lasted for 1.5 years till early 2012. And then only the economy recovered. So don't make decisions harsh. Look at some time. I will avoid equity. Maybe 1 or 2 sectors I can see, 1 or 2 stocks, stock specific, industry specific, you can buy. But my suggestion is avoid equity at the moment. Is it recommended to invest in shares of banking sector, sir? Not now. I will wait to see the impact of moratorium on banks. I will wait to see the impact of e-commerce companies, of movie theaters, right? I saw some article which says in one movie theater in PVR, the average number of people who attended the show was 5 people. So will these companies default? A lot of banks have exposures to them. Travel companies, a lot of banks have exposures. Will they collapse? So wait for November, December. I think by the end of the year, you will have a clear idea of the impact of the recession on banking industry, especially the moratorium part. So till then, wait. After that, maybe you can invest. Welcome, Jayashree. Thank you so much. Thank you, Kali.
Any more questions? Anyone? I think.
Sir, are there a lot of salespeople here?
Yeah.
Sir,
Most of
one advice, pa. One advice. My advice to you is, நீங்க வந்து targets அவ்வளவு பார்க்காதீங்க. I'm not saying ignore your target. நான் trading பண்ணி தான் target achieve பண்ண நினைக்காதீங்க. You can do good asset allocation, make the client invest in the right product. 1 or 2 churning is okay. அது பண்ணிட்டா நீங்க target achieve பண்ணலாம். நீங்க அந்த மாதிரி நீங்க target achieve பண்ணீங்களா, you have a client for life. அவங்க வந்து அவங்க business தருவாங்க. Any business, they will come and consult you. They will give you the business of the family. They will give you the business of the great grandchildren family. They will give you business. Someone in the family will marry someone extremely rich. That business will come to you. I'm telling you out of my personal experience. When we started Finmark, you know who gave us the capital? My clients who I got in 1995, 96. They gave me the capital. Because I was the investment advisor. Even though I don't do formal investment advising, I still help them 20, 25 years later. Because of the relationship that they knew that, okay, Glenn will meet his targets. He might do some churning, but ultimately he will have the interest of the investor in mind. So நீங்க இன்வெஸ்டரோட இன்ட்ரெஸ்ட மைண்ட்ல வச்சுட்டு அப்புறம் நீங்க கொஞ்சம் இங்க அங்க churning பண்ணாலே they not going to question you. பட் அவங்க இன்ட்ரெஸ்ட வச்சுட்டு நீங்க கரெக்டா அசட் அலோகேஷன் பண்ணி நீங்க அவருக்கு கரெக்டான ப்ராடக்டா நீங்க வாங்கி கொடுத்தீங்களா, you will meet a target, you will be happy, he will also be happy. ஸ்டாக் மார்க்கெட் விழ டைம்ல உங்க டார்கெட் மீட் பண்றதுக்கு நீங்க போய் ஃபியூச்சர்ஸ்ல போய் நீங்க ஒரு ஸ்டாக் ரிலையன்ஸ் போய் ஃபியூச்சர்ஸ் லாங்ல போயிட்டு even 1 month he will lose 10 lakhs. அவ்வளவுதான், the client is gone, he won't come back to you. So very, very important for sales people. I learned that lesson early in life and that has benefited me tremendously.
Thank you. Thank you. It was a very, very useful and practical advice. Our entire sales team is listening to you. So they will understand the importance of asset allocation and importance of giving appropriate advice to the clients. So thank you very much, Glenn. It was a wonderful session.
Thank you, sir. Thank you for having me. My pleasure.
It was a real pleasure. It went off like a wonderful, the exchange of ideas, so many questions being answered with practical examples. Very, very useful. I thank you very much on behalf of MSc FSL and on behalf of all our sales team, which has been given, wonderful wisdom, lot of wisdom that they have gained by attending this session. And also probably in the days to come, it is going to be available in YouTube. So more and more people watching this are also going to get benefited by listening to your words of wisdom. Thank you, Glenn. It was a pleasure.
Thank you, sir. Thank you so much. Thank you, everyone.
Thank you.
Thank you. My pleasure, sir.